Welcome traders, Shane Fry from GMT Futures. Firstly, thank you for joining me for the GMT New Trader course. Now this is Module 1, the Introduction to Technical Analysis. I'm personally looking forward to spending time with you as I know you're going to enjoy the course. So we'll put together. So in the first video we're going to look at two ways in which traders tend to look at the market. Now they are technical analysis and fundamental analysis. Now if you're an experienced trader, you've had a fair bit of time in the market, then you probably want to skip over lesson 1. But if you're new and you're wanting to get in and build a good foundation for your trading knowledge, then definitely module 1 is one that you want to add to the lessons that you complete. So let's continue on. So traders, as I mentioned, the two ways in which we can interpret or look at the market, fundamental analysis and technical analysis. We're going to cover fundamental analysis first. And fundamental analysis concentrates on the forces of supply and demand for a given security. So this approach examines all of the factors that determine price of a security in an attempt to determine the real value of that security. So that's referred to the intrinsic value. You may have heard that if you've ever done any options trading. But what fundamental analysis is all about is trying to find out the true value, because based on that true value, the investor or trader is going to make a decision on whether they believe the security is undervalued or is overvalued. So if the intrinsic value is below the market price, then there's an opportunity to sell, and if the intrinsic value is above the market price, then there is an opportunity to buy. How do we analyze the true value or the intrinsic value of a security? Well, fundamental analysis will look at the company's assets, its balance sheets, its earnings, dividends, and obviously in relation to currencies, then we'll look at things like interest rates. So once we've completed that initial analysis, then we can come up with a number that will determine whether the share is undervalued or overvalued. So we touched on interest rates for currencies there. So another example might be an economist who examines the current country's currency based on all the economic factors and the purchasing parity to determine the true value of that currency against other currencies. So for those of you who are looking to trade currencies, that's a way in which fundamental analysis can affect the value of or can determine the value of a currency. So once we've come up with an evaluation of the currency, then we can determine whether it's under or overvalued against another currency. Now the main issue with fundamental analysis is that it assumes that the information is disseminated perfectly and that it's acted upon rationally, and as we know, markets are definitely not a rational place at times. The reality is that fundamental analysis is less accurate, particularly in the short term. So fundamental analysis tends to be more a longer term tool. In the case of long-term buy and hold investors, it's accepted that potentially price will move based on fundamental analysis, but that's generally longer term and based on its intrinsic value over the long term. However, shorter term traders, particularly day traders, swing traders, are more inclined to look at technical analysis rather than rely on fundamental analysis. So we've covered fundamental analysis. Now we're going to venture into technical analysis. Now that's really the focus of, or the specific study of, price action, volume and open interest of the financial market in an attempt to predict future price movement by also examining past market data. Now technical analysis or technical analysts are really primarily focused on price action and volume, and we need to remember that it's just another tool that traders use to predict or forecast future price movement, just as we have fundamental analysis. So it's not an exact science, but technical analysts are not really concerned with the underlying value of a security, but how the forces of supply and demand impact on price. So that's really their primary focus. Now, the tool they use to determine or try to gauge where the market potentially will be moving to are charts. So they'll search charts for specific patterns or other indicators of repetitive price behavior by utilizing pretty much historical price data. So any signs, they look for any signs of institutional buys and sells, reactions of the mass of retail traders are also plotted on these charts. So in our coming videos we're going to talk and we're going to take you through how price and volume are reflected on charts, so we can see firsthand how technical analysts look at charts and determine price action and determine the potential or future movement of price action. So that concludes our session on technical analysis. Hey traders, thanks for joining us for our first video, Introduction to Technical Analysis. If you like the video and you want us to produce more of these as we go along, please feel free to hit the like button at the bottom of the page. Please feel free to share the video with a friend on Facebook as well, and we'll keep them coming. So thank you for your time. Looking forward to catching you on the next lesson. Cheers.